Welcome to the official video overview for the initial public offering of Veritas Finance Limited. Established in 2015, we are a non-deposit taking, non-banking financial company, NBFC, registered with the Reserve Bank of India, RBI, and under the scale-based regulations of the RBI are classified as an NBFC middle layer. As a diversified retail-focused NBFC, we primarily provide small business loans to micro, small and medium enterprises, MSMEs, and self-employed individuals, and over the years have expanded our business to include home loans and used commercial vehicle loans. Disclaimer: investors are advised not to rely on any other document, content or information provided in respect to the public issue on the internet, online websites, social media platforms, microblogging platforms by finfluencers. Investors are advised to wait for the red herring prospectus to be filed in relation to the offer for making any investment decision. This video is directed at and is intended for distribution to and use by residents of India only. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead managers BRLMs and the company that you are the intended recipient of this video and you are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. Initial public offering IPO of Veritas Finance Limited Company. Investors are advised to read the draft red herring prospectus DRHP and the draft abridged prospectus, both dated the 29th of July 2026 DRHP. Initial public offering of up to equity shares of face value of ₹10 each equity shares of Veritas Finance Limited, our company or the company, for cash at a price of ₹, per equity share, including a share premium of ₹, per equity share, offer price, aggregating up to ₹1 million, comprising a fresh issue of up to equity shares of face value of ₹10 each, aggregating up to ₹9,000 million by our company, fresh issue, and an offer for sale of up to 12,827,093 equity shares of face value of ₹10 each, aggregating up to ₹1 million, offered shares by the selling shareholders, consisting of up to 6,454,366 equity shares of face value of ₹10 each, aggregating up to ₹1 million by Lock Capital Growth Fund, up to 3,700,000 equity shares of face value of ₹10 each, aggregating up to ₹1 million by British International Investment PLC, up to 672,727 equity shares of face value of ₹10 each, aggregating up to ₹1 million by Growth Catalyst Partners LLC, collectively the investor selling shareholders, up to 1,500,000 equity shares of face value of ₹10 each, aggregating up to ₹1 million by D Arulmani, and up to 500,000 equity shares of face value of ₹10 each, aggregating up to ₹1 million by Vidya Arulmani. Collectively, the individual selling shareholders and along with the investor selling shareholders as the selling shareholders offer for sale, and together with the fresh issue, the offer. We are a non-deposit taking, non-banking financial company, NBFC, registered with the Reserve Bank of India, RBI, and under the scale-based regulations of the RBI, are classified as an NBFC middle layer. Our company was incorporated on the 30th of April 2015 at Chennai, Tamil Nadu, India, and received a certificate of registration from Reserve Bank of India, RBI, on the 15th of October 2015. As a diversified retail-focused NBFC, we primarily provide small business loans to micro, small and medium enterprises, MSMEs, and self-employed individuals, and over the years have expanded our business to include home loans and used commercial vehicle loans. As of the 31st of March 2026, our loans AUM aggregated to ₹91,342.93 million, growing at a compounded annual growth rate CAGR of 26.33% for the period between the financial years 2024 to 2026. We have implemented a strategy of calibrated expansion by targeting unserved and underserved areas in rural and semi-urban markets in India. We primarily leverage our in-house capabilities to source leads for our rural business loans and working capital loans businesses, while also engaging direct selling agents for our affordable home loans and used commercial vehicle loans businesses. We have also developed customized credit evaluation procedures and operational workflows. Our operations comprise a tailored loan initiation system that is supported by monitoring frameworks and mechanisms designed to facilitate smooth onboarding while maintaining strong credit quality and portfolio performance. We leverage technology and our data analytics capabilities to streamline our lending process across sourcing, onboarding, credit assessment, portfolio monitoring, and collections. We handle both sourcing and collections in-house, conduct digital KYC checks prior to onboarding, and use a proprietary credit scorecard for underwriting and credit assessment. We focus on addressing the financial needs of underserved and underbanked MSMEs and individuals by providing access to credit. To address the significant credit gap in these sectors, we offer a range of products including small business loans, housing loans, used commercial vehicle loans, and working capital loans. We have invested in building a wide distribution network across rural and semi-urban areas with a branch network, excluding service centers of 444 branches across 10 states and 1 union territory in India. As of the 31st of March 2026, we have a well-established presence in Tamil Nadu, Andhra Pradesh, Telangana, Karnataka, and West Bengal, which contributed in the aggregate to Rs 83,441.27 million or 91.36% of our loans AUM as of the 31st of March 2026. Investors should note the following important risks. 1. Our business involves exposure to high credit risk. First-time borrowers in underserved households and businesses in India, with such loans constituting 21.17% of our loans AUM as of the 31st of March 2026. These borrowers may be adversely affected by economic and other factors that affect their income earning capacity. Such factors could lead to increased customer defaults, which could adversely affect our business, financial condition, results of operations, and cash flows. 2. Non-payment or defaults by our borrowers may lead to increased levels of gross carrying amount loans, the Stage 3, which aggregated to Rs 2,264.00 million, Rs 1,620.78 million, and Rs 1,025.97 million as of the 31st of March 2026, the 31st of March 2025, and the 31st of March 2024, respectively, and related provisioning and write-offs on our balance sheet, which could adversely affect our business, financial condition, results of operations, and cash flows. 3. We require substantial funds for our business. Our total borrowings as of March 31, 2026 were Rs 73,740.97 million, and any disruption in our sources of funds could adversely affect our business, financial condition, results of operations, and cash flows. 4. Changes in our loan mix may adversely affect our financial metrics and asset quality, which could adversely affect our business, financial condition, results of operations, and cash flows. 5. We operate in a highly regulated industry, and changes in the applicable regulatory environment or our inability to comply with applicable regulations may adversely affect our business, financial condition, results of operations, and cash flows. Specific attention of the investors is invited to risk factors beginning on page 23 of the DRHP to have an informed view before making an investment decision in the offer. Our company is a professionally managed company and does not have an identifiable promoter. The table below presents the shareholding pattern of our company as on the date of the draft red herring prospectus. Shareholding pattern of our company. The table below presents the shareholding pattern of our company as on the date of this draft red herring prospectus. The authorized share capital of the company comprises of 202 million equity shares of face value of Rs 10 each, and the issued, subscribed, and paid up share capital before the offer comprises of 131,284,209 equity shares of face value of Rs 10 each. As on the date of the draft red herring prospectus, our board has 9 directors comprising our chairperson and non-executive independent director, managing director and chief executive officer, 1 executive director, 6 other non-executive directors including 3 non-executive independent directors. Our board has 1 woman non-executive independent director and 1 woman non-executive director. Given below are the details of the top 5 selling shareholders in the offer for sale. Key financial and operational information. The following table sets forth certain key financial and operational information as of and for the years indicated. Certain significant factors could affect our results of operations and financial condition. These include factors affecting our borrowers and our ability to effectively implement our strategies, availability of cost-effective sources of capital, our ability to effectively manage our finance costs and fluctuations in interest rates, identifying, monitoring, and managing our risks. Our ability to manage our operating expenses and increase branch productivity and regulations and policies governing the retail credit industry. There are outstanding legal proceedings involving our company. These proceedings are pending at different levels of adjudication before courts, tribunals, and arbitrators, from which further liability may arise. The table below sets out a summary of the outstanding legal proceedings and matters involving our company, directors, key managerial personnel, and senior management personnel. Our company proposes to utilize the net proceeds from the fresh issue towards augmenting our capital base to meet future business requirements of our company towards onward lending. Net proceeds. The details of the proceeds from the fresh issue are summarized in the following table as shown. Requirement of funds and utilization of net proceeds. The net proceeds are proposed to be utilized in accordance with the details provided hereunder as shown. This offer is being made through the book building process and is in compliance with Regulation 6(1) of the SEBI ICDR regulations, wherein, in terms of Regulation 32(1) of the SEBI ICDR regulations, wherein not more than 50% of the net offer shall be available for allocation to QIB bidders. Not less than 15% of the net offer shall be available for allocation to non-institutional bidders, and not less than 35% of the net offer shall be available for allocation to the retail individual investors. The equity shares are proposed to be listed on BSE and NSE, and the book running lead managers to the offer are ICICI Securities Limited at www.icisecurities.com. IIFL Capital Services Limited, formerly known as IIFL Securities Limited at www.iiflcapital.com. JM Financial Limited at www.jmfl.com. SBI Capital Markets Limited at www.sbicaps.com. Investments in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the offer unless they can afford to take the risk of losing their entire investment. Neither our company nor selling shareholders are seeking any investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase, or subscribe to the equity shares of the company. Potential investors should wait for the red herring prospectus to be filed in relation to the offer for making any investment decision.